Hello, everyone, and welcome to Liberation Day Eve. As you all are very much well aware, tomorrow the Trump tariffs are officially going to be implemented. I've spent the painstakingly amount of time going through and trying to find each individual tariff that's currently in play, and also looking at the potential rumors that have been circulating in terms of what is actually going to be imposed tomorrow, and kind of what the impacts of some of these are going to be on both investors and specifically in the markets. And then also in terms of consumers, because as we all know, the tariffs will be passed on to consumers and real purchasing power will be lost with these tariffs. So without further ado, let's kind of go over and sum up what's going to be implemented as we get ready for tomorrow's Liberation Day, liberating our portfolios from green to red. So there have been rumors recently that the Trump team is potentially looking at implementing a 20% across the board blanket tariff. And kind of where we got some of these numbers is they hinted that these tariffs were going to bring in about $600 billion in revenue. And that kind of averages around to a 20% blanket tariff on all of the goods that are exported and imported into our country. So what would this kind of look like for consumers? Well, obviously all of these costs are going to be passed on to consumers. I absolutely hate the idea of a blanket tariff, especially for a service economy with the United States doing so little manufacturing in the United States currently. If the idea is to bring back that manufacturing into the United States, this should be a gradual ease into process and not a one-day rush decision where suddenly we have 20% tariffs across the board when we aren't the most mineral rich country on earth, and we still do a lot of our manufacturing overseas. So I don't necessarily think that this will happen. I think this is one of those ideas that's been floated around, kind of like the gold immigration card that was going to cost $5 million. I just think this was a potential idea. I don't see them going this direction. And part of the reason I don't see them going this direction is Trump actually put out that a lot of these tariffs are going to be easier than expected on the countries. Whether he's doing that to try and quell some of the market worries and the market sell-off, we'll see. But again, this is the first time really since the 1940s that the tariff rate has been as high as it's been for the United States, and especially during that time when there were so many tariffs, we saw a lot of market volatility, and so that's definitely going to be in play. Now, there really is absolutely no question what any level of tariffs are going to do to consumers and specifically to inflation and the cost of goods, because when you look at it, companies aren't just going to eat profit margins. You might see certain specific companies try and eat profit margins in a way to keep their costs low, and maybe if they think they can vastly increase their volume of sales. I'm a company I might think potentially do this is like a Walmart, but for the vast majority of companies, they're not going to try and just eat these. They're instead going to pass them on to consumers, and especially as they see other companies similar to them and their peers passing them on, they're going to want to have very, very good profit margins and be able to show investors that they can maintain high profit margins, which means the customer base is going to be eating all of those costs. Now, in potential tariffs that have been hinted that might get implemented tomorrow, we've seen 25% tariffs on countries that buy gas from Venezuela, and this also includes the United States. We've seen 25% on auto parts and cars specifically, and there are questions as to whether what impact this is going to have specifically on Canada, as we get 80% of our aluminum from Canada. And the Trump team, it really doesn't seem they quite fully understand like how the car industry works and how well connected these are. It's not like Canada is some faraway land. From Detroit to into some of the Canada factories, it's a 15-minute drive, and considering there are thousands of parts and cars, currently the supply chain for cars is kind of a like cooperation initiative that really could be impacted by these 25% tariffs, because even the American car companies do a lot of manufacturing that also involves Canada. And with the auto parts and cars specifically, it's going to be really, really hard to try and draw the line specifically onto which portion of the car gets tariffed. It's not like an even split. There are individual parts. These are multiple factories all working together, all providing parts, all getting the minerals where it's cheapest, and then doing their work and sending it over. And it's like a very cooperative thing that we're going to try and slap tariffs on. And in order to do that, we have to clearly define where the Canada portion ends and the United States portion begins. So that's a little rant on that, but I think that tariff, while it might get in place and be easy for finished car goods, I think it's going to be really hard on the auto parts section. Next, we're seeing potential jumps from the current 20% tariff on Chinese goods, and this kind of boils down to China retaliating, and they've actually enacted strategic placements of tariffs, much instead of the blanket that we kind of have on Chinese goods. So they have a 15% tariff on U.S. coal and liquefied gas, and a 10% tariff on crude oil, and 10% on U.S. farm goods. Next, we have steel and aluminum imports, and those have been hit with a 25% tariff, but there are potential changes that could happen there. Again, the United States, 80% of the aluminum that's currently in play comes from Canada, so we might see some tweaks and changes there. Also, watch for the enactment of the 25% tariffs that target Mexico and Canada. I know the Trump team put out that they were looking at that, and that's specifically because Canada's rolled out a set of reciprocal duties, and while Mexico hasn't necessarily yet, they've made many public statements that says if the Trump team tomorrow announces tariffs that specifically target Mexico, they are prepared and they are willing to retaliate with their own sets of tariffs. Then also, currently in things we aren't yet to see tariffs on, but are quite likely and economists are expecting to, we have tariffs that will include copper, potentially lumber specifically from Canada, pharmaceutical drugs, and then one that unfortunately has been brought up a lot is semiconductors. And that one's really kind of upsetting, especially for me. I'm a humongous fan of Taiwan Semiconductors. They are years and years ahead of Intel, which is crumbling into the dust, and currently America doesn't have a competition really with Taiwan Semiconductors because NVIDIA is in a completely different business, and NVIDIA is like the primary purchaser of Taiwan Semiconductors. These are just going to be more expensive. Customers are going to be eating the cost of that, and really the AI initiative bill that the Trump team's actually put out is going to be paying for those semiconductor chips to be more expensive. That's not going to slow down, especially with AI spending not slowing down. While it might not be quite as exciting as it was a couple of years ago, just because the media is getting bored of reporting on it, those numbers are increasing. Now, President Trump has said that he has settled on an exact plan. He had all of his members and leaders in there kind of pitch him different ideas for it, and they have settled on a plan, and he's guaranteed that this won't hurt markets horribly and consumers. Historically, there hasn't been a way to implement tariffs on this scale that hasn't hurt consumers, and also markets really don't like uncertainty, and I see the argument that there is no uncertainty now. We know what direction that's going, and that's going down, but there still is uncertainty for sure. I mean, this is a team that has continued to put out tariffs and then given months to wait and see and kind of negotiate. So I don't think that there's necessarily a set plan that will be kept 100%. I think they have an idea of what they want to implement tomorrow, but we aren't 100% sure that they're going to maintain to that plan for the next 3-4 years or however long it takes to bring American manufacturing back and generate revenues, if that is truly the primary hopes with these tariffs along with negotiations. It's going to be a much more slow and gradual process with big announcements coming tomorrow that kind of kick that off. So, again, what we know for sure is his team has talked repeatedly about how much revenue these tariffs are going to bring in, specifically for the government. please do not read that they're going to bring in revenues and think that's going to get passed on to consumers. No, we are going to be paying the extra cost of those tariffs. They're going to be passed down, but it could help with the deficit. So if the deficit is the only thing you're thinking about and you don't care about the cost of living, you can rest assured that we will get slightly more money and have negotiation power negotiation power, as we have put on the table that we are willing to start a trade war. Now, I already kind of touched on the car tariffs and how that kind of disrupts the North American supply chain. I think it's really interesting because I've done a little bit of research and trying to deep dive into what that supply chain looks like. And again, this is a very cooperation based thing in terms of when studies are looking at American cars. They aren't really even looking at American cars. They just naturally roped Canada in there because this is a supply chain that's been around for decades, and it's going to be really hard to disrupt. There are companies, I hate to harp on this too much because I try not to be super political, but unfortunately issues like this can definitely be political. So there are companies like a Tesla that primarily manufactures all of its American-made and American-sold cars, both out of its Texas factory and out of its other American factory. So a company like that isn't necessarily going to be hit, and that's why, again, today even, they've had a massive jump, whereas the market primarily has had a little bit of a sell-off. I think it came back up a little bit towards the end of the day, but primarily it's been a sell-off, and it's continued that sell-off. So Liberation Day tomorrow, it's gonna be a volatile ride here. I don't think anyone going into the Trump administration thought it was just going to continue to go up and up and up. We know it's going to be a bit of a roller coaster, and there are going to be great buying opportunities. Right now, if you're looking at financial news, all you're seeing is absolute panic. And there are scary things, like tariffs do bring about uncertainty. And there are kind of two ways I see that you can really benefit from this. If you are a passive investor, I don't see any reason to jump from the passive investing train. If anything, this should be a time where you try and get your finances in order, try and lower your cost, and try and dollar cost average more into the market, especially on times where it drops down. If we go straight into a recession, you can become incredibly wealthy by dollar cost averaging towards the bottom of it and just maintaining and holding your positions and letting your portfolio compound and also kind of bump back up as the market's tanked. Now, if you're an active investor, I think this is also a really exciting time to build up a little bit of cash, be prepared to see great buying opportunities, and as the rest of the market sells off and panics and freaks out, understand that there are going to be great buying opportunities. These aren't necessarily things that wildly impact investment theses or wildly destroy businesses necessarily, because the costs are going to be passed on to the consumers anyways. And a lot of these companies will find ways to maintain their margins and find ways to appease their shareholders, regardless, to not all pull out and tank the stock at once. But if that starts to happen, there are going to be businesses that have very attractive valuations, and then you'll get a price rebound and additionally be invested in a quality company for cheaper than you would have had these tariffs not been a thing. So again, it's not the most exciting news in the entire world to see that we could be on the brink of a trade war. There's going to be short-term pain. Yes, there are going to be scary days. There are going to be days when you log on Schwab or Yahoo Finance and wish you hadn't. But overall, if you play your cards right, this isn't going to be something that's going to ruin you forever. If you panic sell, it absolutely could be. And especially if we go back into 2008, I'm not saying we will, but if you look at financial media and financial news, that's kind of the direction that they tend to bring this conversation, is that your portfolio is going to tank, your 401k is gone, yada yada. And if you buy into that and you panic sell at the bottom after you've lost a ton of money, you have locked in that loss. That is money you can never make back. You have locked in that loss. You could potentially try and buy back in at a cheaper valuation, but nobody knows with 100% certainty what the market's going to do, especially not short term, and especially not in times like these where the macroeconomics aren't really predictable. They aren't easy to try and predict, and we're in a lot of confusing times where it's up, down, every day of the week, it feels like. So don't think you can time the market. You can potentially buy in better valuations though. So again, active investors look for those potential valuation drops where you can get in at a better price and the investment fundamentals haven't changed that much. And then passive investors, again, this is a great time to, if you try and not necessarily lump sum all of your money in at once, but you can try and do giant increments of your money, especially towards the bottom, and that'll really benefit you and probably get you significantly closer to retirement in the future. So thank you again for tuning in. I guess we'll just kind of have to see what happens tomorrow. But yeah, I appreciate you stopping by.